This week, the battle against inflation in the United States is likely to end, and investors will assess the real prospects for monetary policy. Although the market is almost entirely confident of a pause, only the inflation data may prove this on Tuesday. Nevertheless, more and more strategists are betting on a bull market, as the major Wall Street indexes continue to hit new highs. InstaForex analysts are ready to inform you about the most important news and the forecasts, and this is a fresh review of the US market. Last week, US major stock indexes closed in the green zone. The indexes hit new highs and posted weekly gains. The S&P showed a 4-week winning streak, the longest since July-August 2022. At the same time, trading in the United States was subdued and index gains were modest. The Dow Jones Industrial Average added 43 points, or 0.13%. The Nasdaq index increased by 0.14% for the day, and the S&P 500 index closed at 4,298 points, adding 0.11%. In Monday's pre-market trading, the major indexes showed green figures. Index futures gained between 0.15% and 0.6%. The Nasdaq lagged the rally, while the S&P 500 held above 4,310 points. The S&P 500 is projected to hover in the range of 4,270 and 4,340 points. On a Friday, the S&P 500 closed higher but failed to reach its session highs, as a Tesla rally did not manage to boost the market ahead of the Federal Reserve meeting. Tesla rose by 4.06%, posting its longest streak of gains since January 2021, after General Motors agreed to use the company's supercharger network. Meanwhile, GM soared by 1.06%, a rally in mega-cap stocks. A season of better-than-expected earnings and expectations that the Fed is nearing the end of its rate hike cycle have supported Wall Street this year, despite fears of a looming recession and stagnant inflation. Shares of tech giants such as Apple, Advanced Micro Devices, and Nvidia surged by 0.22% to 3.2% after falling earlier this week. Target fell by 3.26% after Citi downgraded the retailer to neutral, saying sales could fall further this year due to economic growth. Adobe rose by 3.41% after Wells Fargo raised its rating to overweight, noting that the market of Photoshop software is likely to benefit from the boom in generative AI. Netflix soared by 2.6% after the streaming giant reported that subscriptions jumped after it introduced password restrictions. On Monday, US stock indexes futures rose, setting Wall Street up for another round of gains as investors await inflation data and the Federal Reserve's interest rate decision this week. This is a big week for the markets, with the interest rate decisions from the three major central banks. Meanwhile, global monetary tightening is not over. Last week, key rates were increased in Canada and Australia. Any pause in raising rates is now expected to be followed by more tightening. The Fed is expected to skip rather than pause rate hikes in June. The European Central Bank is expected to increase the key rate by 25 basis points on a Thursday, while the Bank of Japan may maintain its ultra-loose monetary policy on Friday. Meanwhile, the benchmark S&P 500 index, which technically heralds the start of a new bull market, has risen for 4 consecutive weeks, posting a 20% surge from the October 2022 lows. Since last week, the rally has moved beyond mega-caps to more economically sensitive sectors such as energy, industrials, and small-cap stocks. Some investors have turned to small cap stocks, which tend to be among the first to benefit from economic growth. The Russell 2000 index added 6.6% this month, and the S&P 500 energy sector up 6% for the month, and the S&P industrial sector up 5.7%. Other segments of the June rally. The energy sector has lost 7.6% on a yearly basis, while the industrials have gained almost 4%. Meanwhile, the Nasdaq index soared by about 2% this month, although the recent lag comes after the AI sector's appeal soared by nearly 33% on a yearly basis. The broadening rally would have been welcomed by many investors worried about a narrow list of market leaders. According to the S&P Dow Jones Indexes, only 7 companies – Apple, Microsoft, Alphabet, Amazon, Nvidia, Meta, and Tesla – accounted for nearly all of the S&P 500's gain this year. The company is seeing signs of a rebalancing despite the market leader's dominance. Another sign that investors are looking further ahead can be seen in a market breadth, and the percentage of S&P stocks above the 200-day moving average was nearly 54% on Friday, up from a much low of 38%. However, that is still far from February's high of 76%. Better than expected job growth and strong consumer spending were among the indicators that boosted confidence that the market was entering a new phase. And last week, Goldman Sachs lowered the probability of a recession in the next 12 months to 25% from 35%. In addition, Goldman Sachs raised its year-end price target for the benchmark S&P 500 index to 4,500 from 4,000, citing a broadening market rally. On a Tuesday and Wednesday, fresh U.S. inflation data and the Fed decision will tell us if the market has become too optimistic. Meanwhile, Jan rose by 2.5% in the pre-market, trading after an FDA advisory panel anonymously backed Alzheimer's drug Leqembi. Adobe shares gained 1.9% after Jefferies raised its price target for the Photoshop maker to $530. Oracle shares increased by 4.1% after JP Morgan raised its price target to $109, ahead of the company's fourth quarter cloud and enterprise software results later today. Nasdaq shares shrank by 7.5% after the exchange operator said it would buy Thoma Bravo-owned Adenza for $10.5 million. Meanwhile, in the currency market, the US dollar index has barely moved. USDX shed 0.06% on a Monday and continued to fluctuate around the level of 103.4. The index is forecasted to trade in the range between 103.10 and 103.80 today. The US dollar declined on a Monday as traders remained vigilant ahead of policy decisions this week by several central banks, including the Federal Reserve. With the inflation data due out on Tuesday, the currency market could spend Monday making minor fluctuations at its current levels. According to the CME Fed Watch tool, there is a 72% probability of the US Central Bank maintaining interest rates between 5% and 5.25% on a Wednesday. Traders are pricing in a 56% probability of a 25 basis point rate hike in July. And this outlook is shaped by most of the major Wall Street banks as well. They expect the Federal Reserve to leave interest rates unchanged on a Wednesday. However, the Fed is predicted to maintain its hawkish tone due to the strong labor market and elevated inflation. Several economists economists say there could be a toss-up between a hike and the pause at the June meeting. The likelihood of a 25 basis point hike this week was reflected in Citibank's forecast. In addition, most banks expect the Fed to prepare the markets for a hike in July, and Citi strategists say that Fed could be facing a lesson that central banks such as the Canadian one have learned. Further tightening is still needed to bring inflation down to 2%. Amid disputes over the US debt ceiling, attention may also shift to Monday's promissory note auction, where the United States Treasury is expected to ramp up sales. The US dollar index lost nearly 0.5% last week, its worst weekly drop since mid-April. The index will remain under pressure until the release of inflation data, and then the USDX could move in either direction, depending on the Fed's stance. As for the USD CAD, despite being relatively stable during the day, the loonie began to lose ground near the opening of the American session. The pair rose by 0.08% and traded near 1.3350. It's expected to move in the range between 1.3330 and 1.3380 today. Despite the fastest monetary tightening cycle in the country's history, Canada's economy is still hot, which forced the central bank to raise its key interest rate to a 22-year high of 4.75% last week. Furthermore, analysts are betting on another rate hike in July, which provided significant support for the Canadian dollar last week. However, the loonie remains under pressure from oil prices. Crude oil prices fell again on a Monday, driven by concerns regarding demand outlook from China and rising supply from Russia. Brent crude futures fell by 2.9% to $72.61 per barrel, while US WTI crude declined by 3.2%. Both benchmarks posted their second consecutive weekly decline last week as a disappointing economic data from China raised concerns over rising demand in the world's biggest crude importer. That helped keep prices down after Saudi Arabia promised to cut output by 1 million barrels per day in July. Goldman Sachs lowered its oil price forecast due to higher than expected exports from Russia and Iran. The 2024 supply forecast for those two producers and Venezuela were increased by a total of 800,000 barrels per day. The bank's December oil price forecast now stands at $86 a barrel for Brent, down from $95, and WTI is predicted to be trading at $81 per barrel at the end of 2023, down from $89. Moving on, the cryptocurrency market trading has been subdued on Monday. Bitcoin declined during the day and lost about 0.9% around the opening bell in the United States. It was trading around $25,800. Most top altcoins declined as well, with Ethereum, Binance, Solana, Ripple and Litecoin losing between 0.9% and 2.3%. Cardano added about 2.8%. The cryptocurrency market remains in a depressed state after a significant 7% sell-off and decline in trading volume. New speeches by policymakers have presented a mixed outlook on the future prospects of the US cryptocurrency market. Former SEC Chairman Jay Clayton, in response to a question regarding the auctions taken by current SEC Chairman Gary Gensler, said that the issue needed to be handled with a nuance. Clayton stressed that blockchain and the cryptocurrencies were just technologies and that using these technologies in different aspects of the financial system should be non-controversial. Meanwhile, Binance problems continue. Nigeria's market regulator ordered the world's largest cryptocurrency exchange to cease operations in the country, claiming that it's a local subsidiary which attracted Nigerian investors through its website, operated illegally. Assuming that Bitcoin will not experience any new shocks, it could trade between $25,700 and $26,200. If the cryptocurrency leaves this range, it could then move towards $25,000 or $26,800. This was the latest overview of the US market by InstaForex, and we wish you successful trading and a profitable beginning of the week. Until next time.